Hello everyone, this is Evan here from the Trade Risk on Wednesday, September 20th, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Now we're going to jump right into things today with the S&P 500. That's the SPY ETF that we're looking at. But let's remind ourselves that this did go ex-dividend last Friday. So as much as it looks like we're rallying back up to these prior highs here, we are in fact above those highs. If we go to the cash market here, you can see we are above last week's highs and we're trading just under all-time highs here. So we're going to look at the weekly chart first, as we usually do, and you can see, looking at again the cash market here, you can see we're up just fractionally on the week, above last week's highs, and we have uptrends very clearly here on the weekly chart. Now if we go back to the daily chart, you can see we did have some volatility today. Today was Fed day, so we basically, after all was said and done, we ended up flat on the session, but we did see a little bit of an expansion in volatility and range here following the announcement. S&P 500 really kind of shook it off. Dip buyers stepped in here on this brief retracement, but we did have some other markets, gold and even the US dollar, which we'll talk about a little bit later, saw a little more effect based on the FOMC. So this is where we stand right now. Basically, we have trends up on all time frames, as we saw on the weekly chart, daily chart here. The trend still remains higher on the shorter term time frames, mostly still higher as well. So things are still looking good for the bulls. The one sort of headwind that we're running into is arguably seasonality. September in general is not a great month for the stock market. It's clearly has ignored that fact so far as we trade and broke out to new highs this month. But the tail end of this month, going into the last 5 to 7, 8 trading days, typically sees some soft price action. You can take that and interpret it however you may, but statistically, this is going into a soft period for seasonality. So be interesting to see, can we basically close out September near these highs here? And quite frankly, the markets don't have to go straight up or down. They can go sideways, and I think some sideways here would be completely reasonable and healthy. We saw a nice breakout last Monday to new all-time highs. We've gone basically straight up since then on a little bit of a grind, but some trading sideways in here, call it above 24.90 or so, I think would be completely healthy. Even coming back and retesting the breakout level at 24.83 or so, I think that would be completely reasonable as well. You can see the fast moving averages still very sharply and kind of accelerating higher, so momentum is still kind of picking up here on the upside, but some movement sideways here I think would be completely reasonable. But as it stands, bulls remain very firmly in control. Breadth still remains fairly firm, all things considered. We do have a soft patch we're going to talk about in just a little bit of the market, but I think we do have enough sectors here supporting on the upside. Trend is up, breadth is up, momentum is up. So right now, bulls continue to really take control of this market. Now, if we go to the IWM, you can see really more of this evidence here by strong price action. Look at this V-shaped rally here, just a complete march higher. As straight of a line as you're going to see. That's the IWM after washing out below this trend line and then really just kind of rebounding sharply, very close to making new highs. On the year, got very, very close. We had potential to close at new highs today, but we faded a bit. So right now, bulls, again, lots of momentum behind the small caps here. That's a nice, encouraging sign for risk appetite. If we look at the Qs, however, this is sort of the soft spot that we're watching. Now, I don't want to overblow this as it stands right now because some sideways and consolidation here is perfectly reasonable. In fact, the NASDAQ, the Qs, are up. NASDAQ 100 is up 22% year to date. So it's been a fantastic blockbuster year, no doubt about it, and certainly deserves some time to kind of cool off here. But it is noticeable that the Qs haven't made new highs over the past couple of weeks of trading. We had the S&P 500, hell, we even have the IWM now, which is very close to making those new highs. And you can see the Qs just getting a little bit, sideways, maybe a little bit sluggish here. And one could draw some some conclusions and look back all the way from June and start to pick up and say, well, you know what, maybe this has been under distribution for quite a while here, with all of these upticks in sell volume going back to June of this year, and price not really that far above the highs here from June. 144 is when we started seeing this, what we would consider distribution selling upticks on the sell down days. We were at 144, and where we closed right now is 145. So it's been, 3 months or so, trading almost 4 months inside of this range. It'll be interesting to see, if we can start to accelerate higher out of here, above 146, above these recent highs, and really sort of get above the June highs, leave some of this supply that we've been in now for quite a while behind. Or do we need to come back down and retest back to the bottom end of this range, perhaps even the June lows? Getting way ahead of ourselves, not making a prediction at all, just kind of noting here the slightly sluggish performance out of the NASDAQ 100. And you could argue, if you're looking at breadth specifically into the NASDAQ composite, it is certainly a little bit weaker than we are seeing in the NYSE as a whole or the S&P 500. So it's something to pay attention to. Again, I'm not going to get too hung up on it. We do have other sectors that are picking up the slack. And again, given the performance that the NASDAQ has seen this year, some consolidation, some sideways movement here is perfectly reasonable. If we look at the weekly chart, you can see just kind of gliding above this 8 and 20 period moving average. And again, you can see very noticeably, though, the upticks in volume there on some of the sell weeks over the past several months. So something to pay attention to. I think if you're looking for tactical short opportunities, if you're looking to sniff out when this market may see a bigger pullback, I think the NASDAQ might be the clue on that one right now, as it shows signs of just kind of moving sideways and meandering here. If you want to be really aggressive, you could be, with a very sort of tight risk to reward here, although I don't know if the probabilities are in your favor, but certainly from a risk reward basis, it would be pretty interesting, is to basically put a stop at new closing highs and looking for this market to roll over potentially down here back to the bottom end of this range. Again, I think it's an aggressive approach right now because you're fighting the trend and you're fighting a lot of upward sort of drift across the markets, but coming into that tail end of September with some seasonal weakness, maybe that's something that could be interesting for you guys looking for some hedge or tactical short exposure. So that's the wrap up there for the market environment. I think all in all, things still look pretty good. We're coming into a soft patch, so let's see if we get a little bit of a pullback here or some more sideways digestion, and I think keeping an eye on the Qs is something to pay attention to. Now, getting into some of the other markets, TLT continues to kind of drift lower here. It did hammer out by the close, but still in a fairly vulnerable spot. We called this trend line break in the past couple of videos on higher volume on the sell side, so below the fast moving averages now, which are curled lower. So TLT is not the most pleasant place to be. I would not want to be kind of buying this for a dip right now. Not my cup of tea. Maybe it'll work, but certainly just not a setup that I see as favorable and is in my book. But I think, again, path of least resistance is still lower at this point. Getting back above 127 or so, that would start to change my attitude on this, and maybe we do have some type of, of a false breakdown here, or just of a steady pullback that's now going to resume itself higher. But I'd want to see it above 127 or so. As long as it's below there, I'd consider that very suspect right now in TLT. If we go to GLD next, you can see this one's been pulling back. It's had this great run since July. Went from 114 all the way up to 130, 128 and change. Now it's pulled back 5 points or so to 123 and change. So a sell day today, almost an engulfing day. It was actually holding up earlier, and then once the Fed news came out, this sold off and finished the session just off of the lows. So GLD, again, I still in my last week video had the opinion of being, paying attention to this pullback here after such a strong move for the past 2 months. This pullback would be sort of welcomed to see if we could get a higher low to get put in and a better sort of risk-adjusted entry in this possible continued uptrend. And I still believe that. I still think it's something to pay attention to. No real signal on this just yet, particularly with today breaking below the prior 2-day lows, but still something to pay attention to. Silver, very similar situation here, kind of back to this long-term trend line that extends from the 2016 highs, and you can see pulling back over the past couple weeks after having a strong move to the upside since July. If we go to oil next, flirting with these highs here. I like oil. Almost took a trade in this for a potential breakout here myself, but ended up holding off on that trade for now. I do like the kind of high-level base right up here at these prior August/July highs, and you can see it did close at new weekly highs here. So be interesting to see how this closes out the week, picking up a little bit of momentum with that 8 period starting to pull away from the 20 period there. And again, I think looking at a weekly chart, if we can get some continuation off of last week's gains and above essentially the past 2 months of trading, I think the bulls will be very much in control for a potential second leg higher. The downside here with USO is this uptick in the volume, the uptick in the US dollar today, which saw a strong move, strong sort of reversal bar here, strong volume. It's been crushed over the past several months. We don't talk about the dollar enough, probably should start including this more routinely, but you can see here now with this pattern of the past couple of weeks of trading, you can see it's trying to slow down its selling and trying to stabilize right above this 23.75 level in the UUP. And you can see today, again, with this large range reversal, close at the highs, strong volume, that could start to put some pressure on those commodities. So that could be a reason why you may want to hold off on USO, or maybe just wait until the weekly close gets underway and see how we finish out the week. Now, that's USO. I think the last is natural gas, UNG, and I'm still optimistic here for UNG to get this upside resolve. You can see it has gotten traction, stalled out at these highs here from June, July, and August, and you can see pulling back a bit, kind of filling this gap coming into these rising moving averages. Very light volume here, so UNG bulls, I think, keep themselves in the game so long as they hold above this day right here last Friday, above 670 or so. The longer it can hold above here, the more likely I think this can start to resolve itself and make a move higher. So I like UNG. It was down today, but still sort of optimistic here as long as we're above last Friday's pivot. So that is, I think that's all the majors I wanted to talk about. Let's look at some sectors. On the upside, IYT hands down today, really exploding to the upside, 1.5% here, breaking above this recent highs here over the past week or so of trading, and you can see very quickly getting close to the highs on the year back in July of this year, around 175 or so. We broke out to new highs before seeing a fairly steep pullback. We're almost back at those July highs now. So IYT looks encouraging there for more continued upside. Energy continues to work. We've been liking this, been flagging this on this recent up move here. Lots of consecutive green candles on some reasonable volume starting to come in here. So I do like the potential for this long-term downtrend that's been in place all year to finally be broken to the upside, or at least more of a sideways kind of grinds, moving sideways versus straight down. So XLE, that's encouraging, and financials really ripping back here. We sort of talked about this trade. If you listen to the past couple of videos, kind of traced out this trade. We hated it down here as it kind of puked out below this 24.50 level. Talked about getting back above $24.75 to $25, depending on how you wanted to look at it, as a point of sort of control, as a point of changing momentum. And you can see it did just cut right through that, and now very quickly making new highs on the year. Very, very impressive here. New closing highs for financials. Volume isn't huge, but still price action shows this is a nice kind of washout below the support from June, or really from July and August back here. And then the sharp recovery back up to recent highs. So financials, the transports, and energy, which are three sectors that really haven't been grouped together as leadership, are really sort of taking charge right now. And that's sort of the difference of changing of the guard, where I say, you know what, the Qs can rest a bit if we're going to continue to see energy, financials, transports, all those types of names that really haven't been out in front leading, except for financials earlier in the year. are going to start picking up the pace here. So that's on the upside. On the downside, it's pretty much what you want to see. It's the safe haven sectors, utilities really starting to sell off. Strong volume coming in on the sell-off too. That's a bit concerning. We did see something similar like this to this happen in June, but to have this a pullback of that size happen again just a couple of months after isn't ideal. But you can see XLU down on the week, XLP also down on the week, not as significant on volume, but it's right at this major support level going back to March on the staples. And then even healthcare, which is again looked upon as a pretty defensive area, has been selling off recently. It hammered out today and started to put in a reversal. I like XLV out of the three of these that are beaten up here. I like XLV for a potential trade. Do have some exposure in this sector myself. So XLV, I like this as sort of a potential pullback dip buy, but just on a general basis, looking at utilities, staples, healthcare as the sectors that are weak, I guess that's exactly what you want to see as a risk appetite sort of continuation higher in the overall indices. So that's the recap for this week. Thanks so much for watching. As always, if you like the video, don't forget to subscribe to our YouTube channel. Keeps you up to date with all of the latest that we put out there. Thanks again for watching, and talk to you guys again soon.